everybody who has joined so far to this webinar, how you can profit from Brexit now. My name is Jochen and I'll be sharing some wonderful opportunities with you for the next hour or so. Sorry that we start a little bit late, but it's always like that people come in late. But thanks for being here for those who are, and hopefully there might be a few more joining later on. So welcome everybody. For those who don't know me personally, some of you do, some of you don't. This is me, Jochen Siebmann from Germany originally. This is when a few months ago I was speaking at the Rich Dad Asia Congress in Yangon, just to sort of have a little picture of what this presenter here looks like. The next maybe 1 or 2 minutes, I'm just gonna quickly, before we go into the topic, present my book to you and maybe give you an opportunity there as well. So my book is called The Property Apprentice, How to Earn While You Learn, was published early this year, 2016 in January. And it basically puts all the knowledge that I have as a professional property investor into that book to give people who might not be able to join my live seminars, possibility to learn a little bit from me too, how to think like an investor, how to obtain passive income, how to overcome obstacles, which are important, because there being plenty of them, how to buy property with little capital, and some of this I will touch on tonight as well, 14 different strategies, risk management, ultimately how to make money in property, because that's what I'm doing. Some very good testimonials I have received for the book from Madam Tan, CEO of Rich Dad Asia here, that it's basically teaching relevant knowledge and shares good strategies. And I was very happy that right when the book came hot off the press, the very first one who I could give a copy to was Robert Kiyosaki himself. He basically made passive income from property popular last 2 decades, and I think he's an icon in the field, and I highly respect him and he inspired me. So as a reward for you for being here on time, I'm giving you an opportunity to buy that book at 50%, or actually a bit more discount, only 18 Singapore dollars instead of 37. You can go to this URL later. This is not public. There's no link to it. Only for those who are on time, I will show this link. So take it down, take a screenshot, take your phone, or type it into a different browser window if you whatever you prefer. If you want to get a copy at 18 instead of 37 Singapore dollars. So that was the prelude, and meanwhile a few more people have joined. Good evening, I'm Jochen, professional property investor, entrepreneur and author, trainer and mentor. Originally from Germany, been living in Singapore for the last 20 plus years. And I'll share a little bit of my background with you, but basically now my job is I invest in property, find good opportunities and get a positive cash flow out of it. And I'm sharing this knowledge with my students, with people on webinars, with people on live trainings, with people I speak to at conferences and so on, to educate them as well. I had the pleasure of sharing the stage with very esteemed other speakers like Anthony Robbins, #1 personal development coach, Nick Vujicic, just been back to Singapore here actually last weekend, Mary Buffett, Tan, many others, Jerry Robert, Andy Harrington. He was the Aussie #1 real estate coach in the US. So my background is I come from a very poor family that when I was young, something as simple as buying a bar of chocolate, we had to save my pocket money 2 or 3 weeks. And there's also no pictures from the time. So I decided, when I grew up and have an opportunity to take things in my own hands, it won't be like that. I don't want to be poor anymore, and I did. I joined as my first job, because that's what we brought up to, right? Get a job. Joined Deutsche Bank and stayed there for about 16 years. Then went on to Credit Suisse, I stayed another 6 years, but I got basically retrenched from them because my department was shut down because Singapore had become too expensive, and then I was out of job, which is a situation that anybody can face these days. And initially, obviously, like this picture here, I was not very happy about it, but in hindsight, it was a good thing because it helped me to basically take things into my own hands and start generating passive instead of active income. And now I've made it my mission to create passive income that leads to financial freedom through property investing for myself as well as my students. So getting into the topic after this brief introduction, when you're an investor, what is most important for you? What is most important for investors? Well, what comes to mind? Obviously, returns, right? You're absolutely right. You said that. The numbers that your investment basically returns you is what you're keen on, and that's why there's such good opportunities in Brexit right now, because there are very good investment returns to be had. I'll share with you in a moment how you can do that. So ROI is return on investment. That basically number describes how efficient your investment is, how hard your money works for you. Yield is how much income you get on a monthly or annual basis compared to your investment. And cash flow is basically your so-called salary. That's the passive income, the money you get paid out every month, your earnings, so to speak. A lot of investors actually get this part wrong, from my experience. They buy property with negative cash flows where they have to pay every month to sustain the property, whereby it's actually fairly easy to find properties with positive cash flow, especially in the UK. That's why I'm so excited about it, because I really love cash flow big time. And if you're a savvy investor, you should too. The second thing an investor needs to be concerned about is, of course, the risk, right? We don't want to take on too much risk, lest our investment might go down the drain. The high return that initially was promised is gone. And I think we all know stories of investors or products or old grandmas who've been cheated by even banks or other investment advisors out of their money because they took on too much risk, didn't understand it. But that's fairly easy to control if you know how. And Mark Zuckerberg said, biggest risk is not taking any risk at all, because then you don't do anything, right? Important is to recognize and manage your risk, which is also what I'm teaching students. So these are the two major dimensions that investors are concerned about. And does UK investment have risk? Yeah, of course it does. But if you know them and manage them, I think it's quite manageable. And I'll teach you how to do that, right? A lot of investors, obviously, they want the holy grail, high yield, but low risk. Is there such a thing? Yes, there is. Actually, if you're savvy in investing, you can get such things. And if you later on see what I'm doing, or I have just done and I keep doing, you will see that the returns are good and the risks are quite manageable. And you can do it too. So if you want, and you decide to be, even though it's half gone by now, 2016 can be your best financial year ever. Just have to decide to make it this way and take the right action and have the right knowledge. So that's why I can help you with. But of course, you have to recognize that you yourself are 100% responsible for creating your financial future and your personal destiny. Nobody can force you to do it, right? If you listen to webinars such as this or attend courses elsewhere and don't do anything, of course, it's not going to happen. But if you take action, then you can do that. As Tony Robbins said, how can we achieve success? And he is extremely successful, as you probably know. Tony said, if you want to be successful, find someone who has achieved the results you want and copy what they do, and you'll achieve the same results. Sounds quite logical, doesn't it? A lot of people don't, because they doubt and they want to reinvent the wheel, or they find reasons not to, excuses, etc. But you don't have to be a next Mark Zuckerberg to invent the next Facebook to make money. like I said, don't reinvent the wheel, just do what works. And I know what works, and I'm going to show you how it works in the next 45 minutes or so. Why is that so that we don't believe? Well, because we've been conditioned from young to be critical, to not believe everything people say. Fair enough. Retire, right? That was the mindset of probably your parents too, like mine were before too. But I have changed my mindset, and that has dramatically changed my result. I got my mentors and learned about property investing, and I apply it now, and that's, you'll see the results in a moment. Right? Like Albert Einstein also said, we can't solve problems by using the same kind of thinking that we use to create them. And basically, you are the problem if you, there is a problem, but you're also the solution to the problem if you think a little bit differently. And that's why you're here tonight, to learn how to do that, and then hopefully you will apply it. So what if I could show you how to invest into something where you have a low currency exchange rate right now, in an established market with cheap asset prices, low transaction costs, comparatively low taxes, that have a high yield, high cash flow, a great ROI. Would you be interested? Well, I definitely hope so. It sounds exciting to me as an investor. Is this too good to be true? No, it's not, obviously. That's why here, because of, the United Kingdom actually, even like a long time before that, has provided great opportunities for property investors. But now even more so because of the low pound and the uncertainty that motivates a lot of property sellers to sell their assets very cheap. So why do we invest in property? Well, firstly, it's real. Yeah, it's something you can touch, feel, not some financial products that the banks sell and they don't understand themselves, like we saw in 2007 or 8. It performs well. There's always demand, right? If you find the right location, there's always demand for property because people need a place to stay. You're in control. It's not like Enron where other people do mess around and there's nothing you can do about it. You can obtain passive income from your cash flow. What I really like about properties, I can let other people pay for it, and that's what I'll show you how to do it. It's a hedge against inflation, and you can leverage it. You only need a smaller portion of money compared to buying stocks. So 8 reasons why the Brexit provides us with great opportunities at this point in time. Reason number 1, I mentioned already, the low British pound. So if you look at these charts here, you will see the Singapore dollar against the British pound and the euro against the British pound over the last 6 months. Both are reasonably similar, and you obviously see a big drop here on the 24th of June when the British people held their referendum and decided to leave the EU. Now, a couple of things about it though. It was firstly very narrow. Secondly, they're not out yet. Right? It'll be a while until they trigger the Article 50 of the European Constitution, which then sets off a 2-year of negotiation period. So it's at least 2.5 years away, probably, until it actually happens, and until then we will see. But that decision has basically impacted the currency markets hugely. If you're a currency speculator, which I'm not, you would have probably made good money on that day, but you could have lost a lot also if you got it wrong. That's why I don't speculate. I only invest what is safe. So, but anyway, so now you can buy your British property for 10, 12, 13% cheaper than you could in early June, for the last 6 months anyways, which was reasonably stable. So that's one good reason to look at that market, right? And I don't think that the FX rate will go much lower. However, if you do, there is many good banking products available to you to hedge your currency risk, swaps, forwards, etc., that the banker can help you to obtain from him. that basically lock in your exchange rate on this niveau if you think it will drop further. Reason number 2, UK is of course a very established market in terms of property. There's a lot of new markets, especially in this region, coming up, like Vietnam, Cambodia, Myanmar even, that are totally new. You don't know what's going to happen. There's a big risk there, political risk, market risk, currency risk, etc. So I don't really fancy establishing these kind of markets myself. I go to mature established markets like UK or Australia, so on, to put my money. Now, what you see here is the house price index. Halifax computes that every month and gives a short report out on it. So now they're saying that the annual house price growth has eased to only 8.4% from previously 9.2%, which means it has slowed down a little bit now, but it's still growing. I mean, at 8%, if you basically wait for 1 year and don't do anything with your house, it should be theoretically worth 8% more. That's what this number means. So it's an established market, it's a mature market. But one of the good opportunities there is that actually UK has housing shortage. Amazingly, yes, the population growth is about 500,000 a year. EU or not EU, I think doesn't make a big difference. People who are there will continue to live in UK. People who want to move, they will keep moving there, whatever the politicians are doing. And the government doesn't really build houses there, like in Singapore, for example, they do. So it's up to the private market, and the supply cannot keep up with the demand. So that's why it's still a good market to be in. If you get the location right, it's obviously the most critical thing. Property, location. So even within UK, there are pockets where you probably get better returns than in others where you probably don't. So do your due diligence. These are the actual numbers that were underlined from this graph just now. I know it's a little bit hard to read, but in case you really want to see these numbers, go to Halifax price index. I will show you the link later on at the end where you can obtain this yourself every month. You see here the date, 1st of August, from one of these companies that provide market views, where they said Manchester offers the highest yields for investor within UK, that is. You see the link on the right hand side where you can read the full report if you want to get it. I just got something which was only just now from HSBC that says exactly the same thing. HSBC also came up with a report that says that within UK, Manchester gives the highest yields. And that's precisely actually the reason why I have already 1 year ago identified Manchester as my focus area for my property investments. But there are many other areas too. But Manchester, why Manchester? Because basically a lot of population growth, that's always good for property investors. A lot of people moving to Manchester, Chinese building, spending 800 million for the airport infrastructure, and big companies are moving the headquarters there from London, KPMG UK, British Telecom. It's not in London anymore, it's in Manchester now, so it's a good area. Then reason number 3, cheap asset prices. Cheap is in inverted commas because of course it's relative. Cheap compared to what? It's definitely cheap compared to Singapore property. Yeah? For $1 million you cannot even buy any decent condo here these days. It's will be very far out and very small. Then fall out at least probably 1.6 to 2 million here. Whereas the average house price in the UK is, according to the statistics, for £217,000, which is 380,000 Singapore dollars. Now, average is also doesn't mean all that much, I think, because it includes small student accommodation in the middle of some obscure town of nowhere that you can buy for £28,000, as well as the luxury property in London, 10 million, maybe in Buckingham Palace, who knows. So it's a little bit, I don't know, subjective, that average, but still, I mean, it's below 400k, they can buy houses. The title deed. In a small suburban house in not the city center and all that, you can, I mean, there's many on the market, so two better, maybe sometimes three better. For £40,000 and $70,000, it's really low. So it's low entry level that investors can start to invest in, nowhere near prices over here. But remember what I'm teaching and Robert Kiyosaki is teaching and the others are teaching. You make money when you buy, not when you sell. Right? So these houses we don't buy at market value. We buy at ideally somewhere between 20 to 40% below market value from what we call motivated sellers. These are people that basically might have lost their job or they leave the UK maybe perhaps now, cannot pay the mortgage anymore, getting divorced. Yeah, these people have to sell probably fast, and willing to accept low offers to sell it fast rather than being on the market for 6 months or more, perhaps. But now after the Brexit, there's a lot of uncertainty in the market, and I think we see more and more such motivated sellers, which is really, really a good opportunity for you as an investor to snap up these properties at cheap prices compared to Singapore anyways, but even within the UK compared to the market, you find a lot of good opportunities now. One of the tips I can give you, this is the sourcing agency that I'm using in Manchester, resultsproperty.com. You can sign up to the investors email list for free, and if they find below market value opportunity, they will just email to investor. And then it's first come, first serve, doesn't cost you anything. That's what I'm using to source my Manchester properties, at least. In some other areas like Glasgow, I have of course different agencies, but I'm focusing on Manchester now for my own. You don't have to do that. You can go to London if you prefer, or you can go to Glasgow if you're after high yield. It's really your own choice. In all of these cities, there are motivated sellers that you can buy a property from. Reason number 4 why UK property is a great opportunity at this stage, or always has been, is relatively low transaction costs. Right, you don't have to pay much. Like in Singapore, you sell property ABSD 10, 15, 10, plus the normal stamp duty of 3%. If you resell in 3 years seller stamp duty, then in the worst case can cost more than 30% transaction costs. So even if you find a 30% below market value property in Singapore, you still don't make money if you flip it. So pretty much forget it. In UK, legals cost maybe 1,000 or 1,200 pounds. Stamp duty below 40,000 K, small houses, it's free. Above that, it's 3 or 5% in a region that I think we are looking at 50,000 Singapore dollar. It's still quite okay. Above that, it also gets a little bit expensive for the stamp duty. Reason number 5, comparatively low income tax. Some other jurisdictions, maybe Hong Kong, might be even lower than that. But definitely, if you look at Europe or the United States, Britain has a comparatively low tax rate. your first £11,000 is even free of tax, as income tax, and you have to have quite a few properties to get more than £11,000 rent. After that, it's 20%. The other good news is that the corporate taxes is even lower. George Osborne has basically 15 or perhaps even lower. So I'm putting any new properties in the UK into a company now, not into my personal name anymore, and can save some on tax for that. The other advantage of that, of course, you have allowable business expense, meaning you can offset costs that you have as business expense for your company. You can open such a company with Company's House in 10-15 minutes over the internet, like in Singapore with Aqua kind of thing, same thing. And even if you maybe have to visit the property in the UK, you can claim it as a business trip. But consult your tax advisor before you do that. I'm not a tax expert, but I know, of course, a lot of things can be deducted from tax, so you will end up probably paying extremely little tax, not zero, unless you're a really huge investor and have hundreds of properties. And then it's still okay to pay a little bit of tax. Then reason number 6, UK has very good yields. In this report I was referring to earlier on, some cities were mentioned, and these are average returns, so they might not look very pretty. This one here I think is Oldham, but I give good yields, and that's what counts. You don't have to like your house, you just have to like the numbers. So Sunderland, Cardiff, like 5.5%. Even outer London, not city centre, but quite far out, maybe zones 3, 4, 5 might also give you some yield. And as I mentioned, Manchester came out on top, but don't go for average, right? We look for better yields in the cities, and we look for buying below market value, which further enhances the yield, because the rent is the same, but the purchase price is lower. In Singapore, you might have average yields of perhaps 2%, Malaysia 4.5%, and just about cover the mortgage, if at all. In UK, you have 6, 7, 8% easily, and we can enhance it further. So that's why I've been investing in UK for the last 1 to 2 years as well, because of the good yields, good returns, good finance that you can have there. So reason number 7, high cash flow. Right, that's very, very crucial for investors to get cash flow back from the property rather than having to pay in every month. Especially for a new launch property, obviously you have no cash flow at all. You're only speculating on the market value. I'm not depending on the market value the way I invest, and what I'm sharing with you, the concrete example in a moment, what I've just about to complete the transaction. So cash flow is king. So this is an example that you could easily achieve. Unfortunately, my animated GIF doesn't work here. That tab was supposed to spit out some pounds. Anyway, so if you have a rental income of £1,000 per month, you have financing cost, because you should of course not pay full cash, but finance leverage as far as prudent and possible for you. But interest rates is very low in UK, and probably might get even lower now after Brexit in order to help the economy. So financing costs 550, other expenses that you have for insurance, running cost, maybe it's 100, and if you let someone mention another 80. So in the end, you have £270 left over in your pocket, which is your positive cash flow. It's about 500 Singapore dollars, which is not bad for one reasonably small property. If you have a few of those, you're basically already financially free. So reason number 8 is great ROI. ROI is return on investment. So where does the great ROI come from and what kind of numbers can we achieve? Let's have a look. So the first factor is of course the low investment cost. The second factor is then we don't buy it at market value. We buy below market value. Third cost is then we don't pay cash. We leverage our investment. And the fourth factor is we get a high yield with a good cash flow out. All that together gives you a great ROI. Yeah, if you piece all these four pieces of the puzzle together. So now let me give you an example of numbers and my latest transaction. This was in Salford, which is just outside Manchester. There's no real distinction between Salford and Manchester. They're like one town, only like a political border somewhere in between. So I gave it offer end of June. I made my email with you since we talk about Brexit. The legal completion of the deal will be this Friday, the 5th of August, when I get a title deed and have to make payment. So the open market value estimated is about 220,000. You see the house on the left here. This is a duplex, and mine is one half of it. The other half indeed was sold for 220,000 about a few months, 6 months ago, I think. So I paid 175,300 pounds for it, which is 21% below market value, plus 6.3 stamp duty, 1.5 legals, which gave me a total acquisition cost of 183,000 pounds. I am planning to do renovation to make it into a HMO, house of multiple occupancy. Currently it's a 6-bedroom house where a single large family lived in. I'm going to turn it into a 9-bedroom HMO that I can let out to 9 different tenants. Of course, the yield is much higher and that kind of scenario, renting it out as in one go. So my total is about 233,000 pounds. On the right side, then I will either do 8 or 9 bedrooms. I have to see what's the 9th one. Not sure yet. I have to wait for the builder to get back to me with the costs, whether it's worth it in the basement to make it a room or not. So my rent will be around 500 to 550 pounds per room per month. So if I have 8 rooms, I get 4,000. If I have 9 rooms, I get about 4,900 pounds income, cash flow per month. Running cost is about 10% for insurance and electricity and what have you, which leaves me with a net cash flow about 3,600 to 4,400 pounds left over after all expenses are paid once the tenants are in later on this year. So if we do our calculations, the yield on that deal, that's basically your income compared to the value of the property, depending on whether I have 8 or 9 rooms, will be somewhere between 20 to 25%. Now tell me which of your bank accounts gives you 20 to 25% yield on your money. I know the answer, none. In Singapore, you might get 1%. In Euro, that's even negative. You have to pay the bank to leave your money there. US dollars also you don't get much, right? So 20 to 25% is fantastic, it's brilliant, which means after somewhere between 4 to 5 years, my tenants have already paid back that purchase cost to me, which gives me an ROI of somewhere between 18 to 22%. ROI is gross though, but this is my return that I get the rent compared to my investment. Because my investment was initially 233,000, sorry. So depending on whether I get 8 or 9 rooms, I have somewhere between 18 to 22% on my investment. Not too bad, but it gets better. Now, once the tenants are in and I have the cash flow, and I assume the open market value will only stay at 220,000, In reality, it'll be definitely higher because by then it's newly renovated and nice looking, and definitely gives a higher market value. But I always plan conservatively and assume that it just stays the same. Also in Manchester area, the market value by itself without renovation should go up around 20%-ish per year. So hopefully this should give me a pretty decent number, but I don't need it for calculation. I leave it as it is at 220. So I get a 75% loan of 165,000. Interest rate somewhere between 3 to 4%. I expect it to go even lower in the next few months. So hopefully I can get it even below 3%. But again, I calculate conservatively, so I'll leave it at the current rate of 3.5, which then means I have to pay 481 per month interest cost, which reduces my cash flow to somewhere between 3 to almost 4,000 a month after the mortgage and the other costs are paid. But now, listen to this, right? I paid 233, but I get 165 back from the bank. So my own money I've used is only 68,000 pounds to do this deal. It's left in deal. Actually, if you do it really, really well, what my mentors taught me, you should actually get all of your money back. In this case, I don't because of the renovation, quite expensive. However, if the open market value reaches about 300,000 K and I take the mortgage, then I get all my money back, which in a year's time I would see it as a realistic. But anyway, so for now I have 68,000 pounds in the deal, which basically the 68,000 I get back for my cash flow in 1.5 to 1.7 years. The investment, the overall, therefore pays back a little bit longer because I have interest costs to pay back also, but still okay. In 5 to 6 years, I got all my money back, including the interest I paid on the mortgage. And this is the real figure. This is the one that you need to look at, the cash on cash return on investment, right? Not on the investment overall, but on how much money I actually put in a deal, which is not 230,000, but 68,000. And these returns I'm getting, my cash flow of 3 to 4,000 months compared to times 12, right? That's 36 to 48 a year. Compared to the money I used of 68,000, gives me a somewhere between 54 to 68% return on investment on my cash. Of course, the less cash I use, the higher this number gets, until if the market value actually reaches 300,000 and I refinance then, I have no own cash, then my cash on cash return is infinite because I use it. But, for now, it's 50, somewhere 50 to 60%, let's say. It's really, really good. I don't know many other investments that can give 50 to 60% on your money. The risk is comparatively low. As I said, the currency already is down. I don't think it goes so much further. I bought 20% below market value. I enhanced the value of the property by renovation. I don't think there's big market risk left either. There's not been in the UK, buy below market, refinance, pull the money back out and achieve returns 40, 50, 60. Sometimes I've seen 90. Also depends how much cash you have to put in percent on your money. Phenomenal. Also, in the UK, there's only about 3.3 million EU citizens that live there. 2.1 million of them who are working. The others are either spouses or retired or whatever. And I think they're likely to stay on after the UK leaves the EU, if it ever does. Who knows? Maybe they might change their mind. but they cannot just expel all of them. And even if some of them leave, it doesn't make a big difference for a population of 65 million that grows by 500,000 approximately annually, and who need a place to stay, to live in, a property to rent, right? So Britain will remain one of the top trading partners of the EU, is one of the top 5 economies in the world, so will remain strong. And what I also like is that they have a very landlord-friendly law, unlike Germany, where I come from, where they have a very tenant-friendly law, and it's very difficult if you don't pay the rent to evict them and all that kind of stuff. So UK is a great place to be in for property investor, and a lot of other investment trains, whether it's Kevin Green, whether it's Marco Robbins, and they do the same thing. Manchester is the place, UK, great opportunity. Especially over the next few months because of the uncertainty, where they have a lot more motivated sellers. Eventually it'll settle and turn back to normal. So how can you profit from it? Well, like I said, as Tony Robbins mentioned, if you want to be successful, find someone who has achieved the results you want, copy them. So simply what you have to do is copy what I'm doing. I just told you what I've done and what I keep doing. Guess what I'll do with the money from the mortgage? Once I cash out that Salford place, I buy the next one. And the next one, the one after that, right? So because every time I get my money back, I buy the next property to further increase my cash flow. And buy T. So as I mentioned before, you don't get cash flow or 50% ROI by thinking about it, only if you actually take action. So how can you do that? And when should you do it? Well, now, as I mentioned, now is the best time to buy UK property. And it doesn't really matter whether you buy a big one, if you have, let's say, money available, or you can raise it from somebody, or whether you start small, that's okay. But start somewhere, wherever you can. So you might be wondering, how do I do it? How can I do it? If I haven't done it before, some of you I know are from the UK who are on this webinar. For you, it's very, very easy because you got a passport and you might have even a bank account there already. For the rest of you, yes, you need to do a little bit of groundwork first and get it done. But what I always hear people saying when I tell them, yeah, you have to buy properties, oh, well, it's so expensive, I can't afford it. But I just shown you how you can do it. And actually, this money that I used to buy this place was also borrowed money. It was not even mine. So as a matter of fact, I actually didn't put any own money in the deal because I don't have any such sums available. So it was borrowed money on which I bought a property where I'm going to borrow more. And as long as I make a huge cash flow out of it, I don't really see a big risk of having a problem, especially in a HMO. Also, if out of the 8 rooms, one is tenant leaves, I still have 7 paying until I can fill up the 8th room again. Other common misconceptions, debts are bad, right? People are scared of it. Yes, I was also very scared when I signed my first mortgage 20 years ago in Germany, and I couldn't sleep at night. But now it's just a thing you do, because as long as the debts make you money, debts are good. If they lose your money, they're bad. A car loan, no good, because the car is a liability. It's going to go down in value quickly. You don't want to have a car loan. But if I borrow money to buy property, make a huge cash flow and a 50% return on my cash, then I want to borrow money because I get it at 1-2%. I get 50% back. It's a no-brainer, right? In this case, debts are good. Or it's risky, to mention also how you can mitigate your risk. I also teach more in my classes in more detail how you can avoid the risk that you're afraid of and manage it instead of being afraid of it. Right, even Benjamin Franklin 200 years ago said an investment knowledge pays the best interest. Robert Kiyosaki says academic qualifications are important, and so is financial education, but unfortunately schools are forgetting one of them. Nobody learned in school how to invest or how to do calculations, how to manage money, etc. Right? So it's for you to figure out how you can learn it. or I like the one on the left from Derek Borg, Harvard president. If you think investment education is expensive, just try ignorance, because you pay with your mistakes. So in order to succeed in this game, property investing game, I mean, there's three things you need really. Firstly, you need the right opportunity for the right investment. But that's where I can help you with my network, one of which I shared you just now already in Manchester, or I can give you some other cities also if you're more keen on London or whatever. You need the right knowledge, right? How to find a place, how to finance it. Excuse me. Sorry, how to finance it, how to do your due diligence, how to manage your risk. But if you have the right knowledge and you know what you're doing, then you can definitely succeed. But most important is you have to take action and do it. And that's why I have basically put together my property investing seminar called EPIC. Stands for Educational Property Investing Course, where I teach all the things that I've learned from my mentors and that I have put into practice, as you've just seen, to generate massive passive income from my cash flow. So all the fundamentals, all the strategies, how to source, how to manage, how to finance, I'll teach. But most importantly, also mindset and psychology, because that's what really determines your success. All I have changed is my mindset to change from an employee to a professional investor, not being afraid of it, just doing it, because fear is shut in your mind. I help people to overcome these fears in my class as well. So in case you're interested to join, my next one is end of the month, 27th to 28th of August, both days, very intensive, full day trainings where you learn everything that enables you to independently invest, or if you choose, you can also co-invest together with me if you're one of my students. Why so many people join my class is basically saves them a steep learning curve and avoids costly mistakes that surely can cost you a lot of money in property if you buy the wrong one. They want to learn from the best and have the right mentor. They understand how valuable it is, a repeatable, predictable, and profitable process that you just keep repeating. One of this I shared just with you early on. I'll just keep repeating the same thing again once I have my money out from the deal. Learn how to scale up and not to get stuck after the first property. A lot of investors have problem. Yeah, they have money, they invest, money gone. Then how? Right? I'll teach you how you can scale it up like a snowball and keep getting bigger for your passive income. And just here is to build up their passive income, secure their financial future. That's why they want to learn. Again, the course date is 28th of August. So if you want to join my EPIC class, where you learn all the things from mindset to managing, to sourcing, to risk management, 14 different strategies, then please join. I have, okay, now unfortunately the is missing here, so you can't see the list price, but you can check it on my website. It's there. The normal price is $2,447 for the 2-day course, which is actually still cheap, even though I know you think it's expensive. But if you can make such deals like it and you get a huge passive income for the rest of your life, even $10,000 would be too cheap, but the list price is $2,400. But like many other businesses, and because I want to help people, I'm giving a SG51 National Day Special. So 51 times 10 is $510, which is an 80% discount compared to the original list price. So if you want to register, go to this URL here, tinyurl.com/TPA-SG51. This website you can only know about when you are on this class. It's not publicly available. If you go to Eventbrite or my website, you cannot find it. It's only for people on this webinar that I offer this special, as well as my live events, but not over the internet or not any other time. then you have to pay the full price if you want to do that. So really want to learn and committed to your financial future, go to this link and sign up right after we finish here. tinyurl.com/tba-sg51. So time for action now, guys. Right, I'll also give you some bonus if you join. I'll give you some of my ebooks as well as the How to Buy Overseas Property Safely guide by the Association of International Property Professionals, worth $30. I also give you 2 tickets to Tia's Ecker's Millionaire Mind Intensive program. It's not about property, it's about mindset. This was actually a program that really helped me to make the breakthrough in my mindset, and that enables me to do what I'm doing and overcome all this fear that I had before. It's 16 to 18 September. The source was in Dosa. That was $500 per ticket, $1,000 each, but I can get them from Success Resources for you. I also know that afterwards you will have some obstacles, so I also give you 6 months of one-to-one coaching sessions with me. If you want to get coached by me on one-to-one session, I normally charge 500 Singapore dollars for it. So that's worth 3,000 Singapore dollars. I also give you 100% satisfaction guarantee. If even on Saturday you join a class and you think it's no good, you walk out, you get your money back, no problem. Nobody ever did, but it just gives you the basically you have no risk at all, right? You can't lose at all. You're gonna learn. So for joining me this evening. I much appreciated you being here. I wish you all the best in your journey as a property investor. Get your passive income, and hopefully I will see you soon. And until then, thank you. Good night.